Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis, to another episode of Taking Stock. This one is Taking Stock number 59.
59. How about that?
Yeah, how about it?
You just keep bringing me back. That's amazing.
I'm ready for the traditional every second week. So how are you, Art?
You know what, Chuck? I am fantastic.
There it is.
Yeah. God has been shining down upon me here for the last few weeks, so I got no complaints.
Yeah, well, and then I'm going to say this right at the beginning. Let's get this, let's get right to this. It's important. So this Saturday, a member of the Jarvis Global Investment family, and frankly, just a member of the Jarvis family, no matter what, is getting hitched.
That's right.
So congratulations to Austin, and then his bride is, shame on me.
No, it's Kate. Well, she goes by Katie. So
Katie.
The running joke around the household is her real name's Caitlin. So my Caitlin dropped Jarvis a year ago. Well, Katie is not Katie, is about to become Caitlin Jarvis, so we're calling her Katie Jarvis 2.0.
That's a beautiful thing.
There you go. So
and of course, she loves being called 2.0.
Well, I don't know. We also call her by the town she's from too. So she's got a few names. So anyway.
Outstanding. Well, congratulations to Austin and Katie / Caitlin Jarvis 2.0.
Yeah, thank you. Yeah, she's a terrific young lady and comes from an amazing family who is a whole bunch of fun and everything. So it's a good thing.
Well, if they don't want to listen to the whole episode 59, at least they got this right at the start. We made sure that they know that Art Jarvis is.
Yeah, I'll see him tomorrow night. I'll tell them to listen to at least the first 2 minutes. How's that sound?
That's perfect. That's perfect.
Actually, they are listeners.
Well, as far as I know, they didn't give you a check to say good things about them, so.
No.
Okay. That just came from the heart.
Yeah.
All right.
Yeah, there you go.
The heart of art.
The heart of art. There you go. That sounds like a t-shirt.
The heart of art speaks well of the bride's family. So, anyway, well, hey, congratulations to you and certainly to Austin and to Katie.
Yeah, thank you.
And it should be a great fun day Saturday,
yeah. Looking forward to it.
All the work's done, and now it's just time to enjoy the day.
Thursday, Friday, Saturday, all kinds of stuff coming up.
Well, Saturday's the enjoy the day. The Thursday, Friday still work.
Yep.
Anyway, so we took stock of the Jarvis family's growth chart. In the past 12 months, it's been a steady growth of the Jarvis family. Mm-hmm. But that's not really, that's not what the rest of the listening audience cares about. What they really care about, I'm sorry, Art, they just really don't.
Oh, I'm disappointed. I'm actually worried that they're more concerned about economics.
and there we go. We're going to jump right into it. I want to say something, though.
Okay.
Because we talk a little, this isn't just the finance, we talk about the news that's going on in the world too. And this is my comment today. Because, and we touched on this slightly, and you said you weren't actually 100% aware of what day this is.
Right.
But to my knowledge, this is day 13.
You're correct.
All right, of the government shutdown.
Right.
Because it shut down on Wednesday after we recorded the previous episode nearly 2 weeks ago.
You're absolutely correct.
Episode 58. But so anyway, here's where we are in Chuck's vision. 13 days of government shutdown.
Right.
And President Donald Trump just brought peace, brought the Gaza Strip peace, brought the war of the Gaza Strip to an end. There's agreements and ceasefires, hostages come home, peace on the Gaza Strip.
Yeah.
But the doggone senators and congressmen of the United States can't find peace on the congressional House floor or on the Senate floor. They have to just keep fighting. Yeah. That's Chuck's vision of the world we're in today.
And you would hope maybe that developed maybe a little momentum on the floor. It's because it's interesting to me is, you're seeing messages from Chuck Schumer and from, President Biden, praising the process and all that, and talking about how, they are saying nice things about Donald Trump, which doesn't happen a whole lot.
Well, what? No, continue.
But the point is you would hope that maybe that gets some momentum going, a little positivity going, and things like that. But I mean, you said it. We're in day 13, and I don't think we're any further along than we were 13 days ago.
Well, I like you slipped it in, and you probably thought I didn't even hear you, but I heard you slip in. So maybe Trump's going for a new record. No.
I did. Well, yeah, there were discussions before. Yeah, I mean,
my response was no.
The old record was what, 35 days or something like this. So he's still got. He's still got 3 weeks.
Well, let's hope that in 3 weeks from now.
But here's the difference.
Let's hope that in 2 weeks, when we record episode number 60 of Taking Stock, let's hope in 2 weeks when we record episode number 60 that you've heard nothing but fine reports of a wonderful honeymoon for Austin and Katie, and that the impasse has come to an end, and the government has a budget and things are moving forward peacefully here on the soil of the United States of America.
Well,
maybe.
I'm with you on that. I sure hope that's true. I will not be betting the ranch on it. But, and here's even more interesting thing about this. So what makes this one different, right? About 14 days ago, this is what we talked about. So yes, nothing's different. So this is already at 13 days. It's already longer than what you would call the average shutdown. You look, average shutdowns are usually in the single digits, right?
Yeah.
They figure out.
Well, we had a 16-day one, we had a 35-day one, but those are the anomalies over a century of this stuff.
Yeah, precisely. So, the thing is what you're hearing different this time is, I'll just call it the threat or the discussion of some of these employees that have been furloughed or laid off for time being are being threatened with their jobs. Okay, any other time, and I can't quote a time in the past where someone's jobs were being threatened specifically. They pretty much knew that, okay, I'm going to be off work for a certain period of time, but when I come back, I'm going to get retroactive pay, right? Well, there are threats being made this time around that people are going to actually lose their jobs, number one, and number two, some positions not even get the retroactive pay. So there's this. That's what makes it. And I would never like to say it's different this time, but that is kind of what makes this one a little different than prior shutdowns. So,
well, how about a little insight for the American public that does listen to Taking Stock? And I will refuse to reveal my source. But it is a tremendously reliable source who is in a director position in the U.S. government.
Yep.
A director. That's there. And that page you were just talking about, where typically, nothing different except for, now some jobs are being threatened. Well, certainly at a director level, I'm going to be off work, and then I get the retroactive pay. And some of those people, now my particular source, who I won't reveal, he's working every day. He's going to work every day. He's not getting paid.
Okay.
And he doesn't have to.
Right.
But
he does not have to go to work.
Right. He does not have to.
Okay.
But he looks at it and said, some of these people, like me even, they say, this is coming up, it's going to shut down, and they've got their vacation plans. And then if it doesn't shut down, well, okay, they don't go on a vacation. But boom, if it shuts down, they're on vacation and they know they're going to get their money. And he says he thinks that's just a total waste and that's laziness and that's not. He said, I'm conscientious and I'm going to go to work every day. I know I'm not going to get paid, but I also know I am going to get it after it's over. But one of the things, this is the inside. That's not new. That is not new.
Right.
And when this was being shared with me by this person, I was like, well, that's not new. No, but do you realize how big a waste these shutdowns are? He said, do you know how long we've been preparing for this shutdown and how long before they knew that jobs were going to be threatened, because they were tasked with going through their organization to determine who not, because they always go through, when there's a shutdown, they always have to go through the, well, we'll just say process, whenever jumping through the hoops. But the process of deciding who are the essentials and the non-essentials,
Sure.
because some people really need to come to work, even though they're not getting paid because of the shutdown.
Definitely.
And then there's some that, frankly, are going to get paid, apparently, somehow, something. Anyhow, this time, that drill, that exercise, that jumping through the hoops process was these people that you may deem non-essential. You're also saying, who are we cutting? So they do.
Yeah.
So I don't, if you knew that, if the rest of the world knew that, we know they go through the process of understanding who's essential, who's non-essential. And it is a process, and it is an exercise that they have to go through. But the total waste art, because they have to, they're working and they're getting paid to do this whole exercise of preparing reports, tasked with saying, you know what, Art Jarvis is non-essential.
Yeah.
And then, this time, maybe at the end of it, Art Jarvis was so non-essential that when we do go back to work,
why bring it
hey,
back?
you got your furlough papers.
Yeah.
You have been furloughed.
Yeah.
And having that low point in your life where it's like, well, now I got to go look for a job. I thought I was going to work for the feds the rest of my life and retire, but that's.
Yeah, I think you're right. I mean, I'm sitting here, you're talking, I'm nodding my head.
Right. No,
right.
Unfortunately, some of this, it's good that we're, there's a video that goes with taking stock. You see some video images, but the good thing is we're not on camera because, like you mentioned, maybe a name and. If I people did not need to see Chuck's response to that name or that whatever it is.
I shake my head, I nod my head, and this is not a video podcast, so and the listeners probably can't hear the rocks.
Well, they hear rattling.
Yeah, that's what I'm talking about. Yeah, the gravel in my head is you can't hear it on the radio. But no, I mean I think so. You make a good point. I think so. I don't think anyone would argue the fact that there's a lot of fat in our government. Okay, there's a lot of things going on that need to be cut. Okay, now there might be a kinder, gentler way of making the cuts, but I'd love to talk to the person who thinks there's no fat in the government. Okay, so
hey, listen, again from the source, the letters have been prepared.
Yeah, okay.
They're going to get their walking papers potentially.
So is that a good thing or is that a bad thing?
Well, That is an excellent question. Yeah. And we both know that the truth is there's good and bad. Mm-hmm. I mean, if they're going through a process that's determining where there is waste, then that's the good thing.
Yeah.
But the fact that they're doing this exercise because of a shutdown, because two sides can't come together and pass a budget, that's a bad thing. Yeah. Now, that exercise should not be run, once a year when the budget comes up.
Right. There's a saying that doesn't necessarily apply. What's the difference between a recession and a depression? The difference. A recession is when your neighbor loses their job. A depression is when you lose your job. Okay. It also holds true here. Cutting the fat in an organization is a good thing. Unless you're the person who's the fat and you're getting cut, right? So, I mean, if you're talking about losing tens of thousands or 100,000, I don't know what that number is, but if you're talking about that many people all of a sudden are out of work, number one, and are not coming back to that job, now that starts to have an economic impact and all those kinds of things. Is it again, there's the economic way of looking at this, and then there's the societal way of looking at things. But from an economic, if you're cutting the fat, if you're in an organization, if you're running a business, you have shareholders, and technically the U.S. government has 375 million shareholders, right? If you're cutting the fat, you should be making that organization more streamlined and should be making it better. Now,
lean, mean, slim, and trim.
Yeah, and couple that with the fact we talked about this a couple weeks ago, I believe. Couple that with artificial intelligence. So how many white-collar jobs is artificial intelligence in the process of or already taken over some of these jobs and made them way, way more efficient, because these computer algorithms and programs and stuff can do tasks 100 times faster than a human can do it, right?
So, you use the word, the difference this time.
Yeah.
Because it's not different in seeing this happen. The difference this time is and you use the threat
right.
of jobs.
Mm-hmm.
Well, that's an interesting term, because we just covered the fact. Well, is it threatening to? Yeah, it's threatening to you if you're the depression versus the recession guy,
right.
and it's your job. But don't threaten me as we the people. With the government might lose jobs because, frankly, and now we're going to get to taking stock. All right, now we're going to really get to taking stock, because, frankly, what has been the impact of this government shutdown? What has been the people's reaction to this government shutdown? What has been the market's reaction? There's three questions. Go.
And all three answers is the market, with the exception of Friday, but that didn't have anything to do with shutdowns.
That was tariffs.
That was tariffs, and that was China, so specifically. Market, honestly, I was sitting here at my office Friday morning, literally thinking about the next Taking Stock episode, going, we sat there and we were talking about how the S&P 500 was hitting 6,600, and I'm sitting there looking at it at 6771 or something like that.
6764.
64.
Is what you
Thank
told
you.
me.
Yes, and we're only 36 points away from 6,800 on the S&P 500. Well, that changed very quickly Friday when the announcement was made that China wasn't playing nice. I think that was pretty close to a quote. And they were being big meanies or something, and and that Trump was talking about putting additional tariffs on China, and actually the market closed down over 2% on Friday, so we lost a couple hundred points, or 100 and something points, and after the close, or right at the close, they announced a 100% tariff on China. Now, so take that away, people generally have been ignoring the shutdown. The market has continued to work its way up. Interest rates dropped Friday, but before Friday, interest rates were staying very stable. To answer your question in a very long-winded way, it's basically, it hasn't been a factor up to this point. I think people are looking at it going, this is going to be just like every other shutdown, and guess what? We might get off trend for a very short period of time, but as soon as they bring things back, we're going to get right back on trend.
Well, we're within, basically, we're within 40 minutes of the bell ringing today at 4 p.m. Yeah. So I know you got it at hand. So what's the S&P sitting at right now?
So as of today,
just to give a number to our audience.
Yeah, so we're sitting at 6673. Yeah. So we're down
it's recovered.
90-something points.
It's recovered.
Yeah. Well, we got more than half of it back yesterday.
Yeah.
And then we're up another point. Just call it 0.25% at this moment in time.
66 what?
6672. I'm going to call it 6673. So so we've generally gotten it back. Yeah, it's and again, here's the problem is the other thing. And while I'm sitting there thinking about taking stock for today, is how quickly, it wasn't that long ago we were at what, 54.50? No, 48.50.
48.
We've gone from 48.50.
That was February.
Yeah.
Right?
Well, the end of April. Yeah, because we started in February.
Right. Yeah, that's right.
But you're right. Yeah. So we went from February to April. We're at 48.50. Friday, we're walking up the front walk of 6,800 on the S&P. Okay, now.
Getting ready to knock on the door, ring the bell.
I mean, I'm sitting there going, look at this. We might be talking about 6,800 on Tuesday. Well, that got taken. I should have never made that thought.
See what happened?
It's my fault. But no, the point is I said before, there's a such thing as too far, too fast. Okay? I'm not saying there's anything wrong with the economy or anything like that, but it is healthy for our markets, for the global markets, to take a breather. Okay, and it either can be, a 2%, a 4%, a 5% pullback. It's not even a bear market until 10%. So it's healthy. Okay, so it doesn't bother me. The reason we dropped doesn't bother me. Okay, and even so, Friday it's like, okay, we're down over 2%. We're going to slap 100% tariffs on China. Yesterday, Trump comes out and says, don't worry about it, it'll be okay. And then today, the commentary is, well, really, that 100% tariff depends on Beijing's next move. So 100% tariff's not even a thing yet.
Right.
But, no one's getting charged 100%.
So, and over the weekend, the talk was Trump was confident that he's going to come to some agreement with China. Mm-hmm. And of course the thing was, people were going, before Russia.
Yeah.
And then Russia's going to follow suit because they're not going to have any options except that when China, nobody's saying China is going to cave in, but whatever terms they come to, that like cool your jets with this or that or the other thing in terms of wars. So, that was over the weekend too. That's a China thing, and that is all part of the tariff situation. We're going to, if we have to force you. The interesting thing, I think, it's so funny because people are looking at this tariffs as a horrible thing. Yeah. And ultimately for our economy, I kind of think it's more of a positive thing. Mm-hmm. But, that remains to be seen, especially if it's 100% tariffs. But have people forgotten, he's not saying, what, we're going to go bomb them. We're going to send the missiles in. We're going to send them a strong war message because we have the fighting power to do that. Right. And Trump is taking a very interesting approach to settling, the discord across the globe or around. I don't want to say across, around the globe. Bringing peace through, strategic economic tactics. Right. That are, that haven't worked. It's not like this isn't brand new. Don't give Donald Trump. I'm not putting this golden crown on Donald Trump's head, but he's using these economic strategies to bring a more peaceful world.
Right.
And here in the United States, at least politically over the years, we're like, this guy's a warmonger, or whatever, or that guy's a warmonger, or whatever. This party's about fighting, and this party, whatever it is. Right. Well, guess what? We have a president right now, and if it sounds like a ringing endorsement, so be it. But I'm all in favor of finding peace, and if it's through economic strategies, then I think that's pretty darn good.
Yeah. The thing is
how much do you want to fund the war machine? That's a question too.
Yeah, and let's keep things in perspective. When we're talking about tariffs and back and forth, we're talking about imports and exports.
Right.
But let's remember, imports and exports are roughly 4 to 5, maybe 6% of our gross domestic product. Okay? We're not going to go to war over computer chips. Okay? We shouldn't go to war over. It's not.
I wish you had.
I know, right? Yeah.
That was the take
what Jarvis says and do the opposite. But it's that's not. But what I will agree with, and we said this months ago when this whole tariff, back in February, March, when the whole tariff thing started, the point was short-term pain for some longer-term gain. This whole tariff situation didn't develop at the beginning of 2025. We have some inequities with other countries that have been going on for decades.
Right.
So I believe the attempt that is going on now, whether other countries, whether the U.S. public likes the process and how it's being done, that's completely open to debate. But I still think the end goal is that we alleviate some of these inequities that have been going on for decades.
Right.
Okay. And I believe, with the exception of some really big countries, we're making progress. Okay. Now, let's remember, and we've talked about this before, China as a society is more than willing to put up with some pain for an extended period of time to accomplish what they would like to accomplish or get close to what they want to accomplish, right? Us as Americans, we talk about a tariff on Friday, we would take 2.25% out of the market in one fell swoop. Okay, we panic, but it's uncertainty. Oh my gosh, what's going on? And and I've got all these profits. I better take some profits, or I'm going to lose all my profits and things like that. China doesn't play that game. Okay, China as a people, they are once again. They are more accepting of pain than we are as Americans. In my opinion, this is coming out of my mouth, but that's my opinion, and I think that might play into the strategy that's being employed. Okay, again, I'm not that smart. Okay, but I still do believe that we've made some progress since February. I do believe we will continue to make, and I do believe as a whole, from an economic standpoint, we will be better off at the end.
Okay. I agree. Yeah. To bring the show to a boring moment, I agree.
Yeah.
I'm not going to challenge that, and that's what I was saying too. It's like I'm a little bit tired of the freaking out over tariff announcements because they seem only to be, as you said, taking care of some inequities that have been going on for decades. And again, this administration, and specifically out of the mouth of President Donald Trump himself, said, hey, including me, because there was a Trump administration two administrations ago that didn't take care of this then either. And I think some of the key things that you point out are the I kind of lost my train of thought there, but the inequities and how we respond to them, that's a very key point. Right. And so I don't get it. The other thing is, like the bigger countries, specifically China, I guess that's what we understand, is they seem to, as a people, as a national populace, they seem to be more willing to, go through some pain. I guess we sort of believe that, but I don't know. Are they really? Or is that just...
I think they play the long game. I think they're very good at playing the long game. Again, but here's...
Yeah, but you know what? That's not a we the people. I mean, that's the trick.
Yeah.
In the U.S., we are a we the people.
True.
And in China...
they might not know there's an alternative.
The people are, this is the way we're going to do it.
This is how it's done, right? Yeah.
I mean, is it truly that bad in China? I don't know.
That's the problem.
It's a beautiful place.
I've never been to China.
It's a beautiful place.
I spend most of my time in Loveland, Ohio.
It's a beautiful place.
Well,
I've not been there
either, smoggy.
These places are just beautiful.
And here's the way, if you look at it in Art Jarvis's world, you take 2.25% out of the market in one day, that's opportunity. I've said this before, volatility equals opportunity.
Right.
And profitability. So if I've got some extra cash sitting around, if I've had some new money come into portfolios, and I'm sitting there looking at it going, man, we're getting ready to hit 6,800. I just got a bunch of money in this portfolio or in these portfolios. Do I really want to go spending that money today? I'm probably going to take my time doing it.
Right.
Well, guess what? By that same afternoon, we've taken 2% out of the market. Well, guess what?
That's a 2% sale.
Yeah. Guess what? Stocks just went on a nice kind of small little sale. Right. So guess what? Now I've got a much better opportunity of buying. I might give it a day or two or three before things kind of settle down a little bit. Yesterday and today are perfect examples. The rhetoric's completely different yesterday and today than it was on Friday. So guess what? We now have an opportunity to put some of that cash to work at lower prices. So from that little part of my world, that's a good thing.
Well, we've been taking stock for just about 29 of the 30 minutes we're going to use, and I think we've taken stock of what's going on national news wise, but also in the markets and the dollars and cents wise, and for people's investments and for our economy. So what should we look ahead to? We're going to be back in 2 weeks. So in this final minute, what's coming up? We're on today's October the 14th.
Yeah. I think the big thing, obviously we're 9 I couldn't get past the tariff. The tariffs are going to have some news, good or bad. Hopefully there's going to be some headway made with the shutdown. So there's two things. The third thing is going to be interest rates. Okay, there's discussion today about the Fed talking about they're getting ready to end the tightening program. Okay, so that tells you now that generally for the time being you don't have to worry about interest rates going up. We're still getting rhetoric about half of the Federal Reserve board is in favor of lowering rates a couple of more times this year. So
right.
Let's say
all you got left is a couple of weeks this month, and then November, December.
Exactly. So
the Feds are going to meet.
Yeah, in October. So we might get one this month, and then might get one in December. And so let's say it's a quarter and a quarter. There's another 0.5% taken out. Again, I've been wrong before, but I'm surprised that they did a 0.5%. Yeah. But so I'm still surprised that we would get 2 quarter-point moves, but I've been wrong before. So, so I think that's, if I'm going to give you 3 things: tariffs, government shutdown, and keep an eye on interest rates, and that's what's keeping this market going, is the promise of continued decreases in the Fed funds rate. If your interest rates drop, if your Fed funds rate drops, that increases the market multiple that the market is able to sustain. You take that same, whatever it is, call it $350 in S&P 500 earnings, and instead of multiplying it by 20 times earnings, you multiply it by 22 times earnings.
Right.
You just 2 times 350 is 700 points on the S&P.
Yeah.
Theoretically.
Wow.
Theoretically,
right?
Okay,
I'm just saying, wow.
This is not an exact science, but that's also what's you keep looking. When we started this process, we were looking at low $200 and something of earnings in the S&P. Here we are at 350. So,
well, so you know what? We're going to wrap it up, but I'm going to throw this one at you. Okay. So S&P 2 weeks from today.
Oh, jeez.
It's 66. It's 66. I mean, so do you think it'll cross 68? Even if it drops back a little after that, you think in the next 14 days we'll see the S&P go from 66 to 68 plus?
Yes.
Okay. I think it will too.
I'm just curious. If you forced me to place a bet, I would bet it'd be above 6,800 in the next 2 weeks.
All right. We'll take note of that. And then, so I'm concerned. So Jarvis Global Investments, you guys are going to be okay while Austin takes a honeymoon?
Yeah, we'll be fine. we still got Katie Jarvis 1.0. Of course, she's not Katie Jarvis anymore, Caitlin Jarvis anymore, but she's still around. And guess what? I'm not going on a honeymoon either.
Gepfrich. Caitlin Gepfrich. Gepfrich.
Yep.
Not
Yeah.
Caitlin Gepfrich.
You got it.
And you know what? We've been teasing the audience. I keep saying I'm going to get Caitlin and Austin on to talk about, Bitcoin and all that stuff. We're going to do that one of these days.
I think you should.
But in the meantime, hey, listen, pass along my congratulations once again to Austin and Katie / Caitlin Jarvis.
This everybody's going to be completely confused.
You guys enjoy the day Saturday. I look forward to seeing you again in 2 weeks. And Art Jarvis, thank you for joining us once again on this episode of Taking Stock.
All right, thank you, Chuck. Appreciate it.
Until next time, this is Taking Stock. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.